Hello guys, welcome back. Happy Memorial Day. Here is another quick market video. So if we look at futures, it looks like we finally broke this channel that we've been in for about a month. So this right here is the futures chart. Let's for a second take a look at the SPY chart. So here's a daily chart for the SPY, and I want to look at something real quick. So one thing I forgot to point out in our last video is this gap right here. One thing we need to know about gaps is that when a gap is made like this, it tends to get filled. Okay, gaps always want to fill. Now, when that does not happen like it did here, and down here and up here, that's pretty significant because unfilled gaps are very powerful. So like back here, this was the start of the dump in February. We had a huge gap on a Monday open, and from there we just dumped for a month and a half. So unfilled gap to the downside, powerful downside move. If we look at the bottom of our bounce here, we had a big gap up off the bottom. That gap never filled, so we had a strong move to the upside. And again here, another gap that didn't want to fill, so we continued moving upward. And then 5 days ago, last week, another gap. That gap attempted to fill here. It didn't want to. So now look at what happened. We've broken out to the upside. So now we've finally broken out of this channel with a open gap, which suggests we're going to see a pretty powerful move to the upside, especially since we stayed in this range for so long. It should be an explosive move to the upside. Now likely that's not going to happen all at once. So I've outlined some possible areas of resistance. So if you look here, I see here 3017, 3018 as being a minor area of resistance. And then up here at 3088 being a more major area of resistance. Why have I marked those areas as points of resistance? Well, if you look at the volume profile, the volume on our y-axis over here, there is a big dip in volume to this area that we've just broken out into, which suggests a decent move upward with no hesitation. But as we get up to this 3080 level is when we see some volume resistance come in, and that's also the top of this candle here where we we had that big dump in February, then we bounced, and that's where we rejected from to go all the way down to the lows in March. So a great short setup would be to play off of this candle right here. The top of this candle was 31.37. You want to see SPY start to come up, get near that price, get around to the area where the volume on our volume profile picks up, go short there, and then use this area 31.37 as your stop. Chances are if we did reject from there, we'd probably come back down. It's going to set up just like the Nike trade we talked about. It's going to come down to the area that we broke out of, which was this channel we've been in for a month. It's likely going to come no lower than this 29.70 area, because old resistance acts as new support, and then we'd likely bounce from there and keep heading higher. So that's what I'm looking for in the S&P. Now I know in the past we've looked at AMD, we've looked at Nike, we've looked at Apple. Those positions are going to be good for us with the market breaking out. But I want to take a look at a different stock today. I want to take a look at Tesla. So here is Tesla. It looks to be trading in this triangle right here. And here's the deal with these large, big cap tech stocks, is that they make big moves and then they'll come down and they'll trade in a tiny area, kind of like Tesla's been doing for the past couple days. When they get down and trade in these tight little ranges, expect to see an explosive break of that range, either to the upside or the downside. Now, my bias is to the upside. The reason I say that is because of the volume profile. If you look here, we are supported by this big area of volume right below where price is currently sitting at. That's the daily 1 year. The daily 6 month, same thing. On all of our time frames, we see that price looks to be supported right about, let's draw a line, right about here at 805. So let's take a closer look, go to the hourly chart. There are a couple things that stand out to me on this hourly chart. If we look right here, there's a line of support at 764. We know if price gets below 764, that's a major breakdown in Tesla. If we look more near term though, there was a dip right here that got quickly brought up on decent volume. The volume here for the middle of the day is relatively stronger than these days, not quite as big as these. So 764 is clearly major support. Our minor support here is at 794, 795. And then our volume profile tells us that there's a large block of volume below 805. So here's what I'm thinking for a trade setup for tomorrow. There are 3 possible things that could happen tomorrow with Tesla. Either Tesla drops below 805 and above 796, which if it opens in this area here, I'm going to buy calls, and I'm going to use 796 as my stop. It could open near flat, which I would do the same thing, but I'd have a bigger risk on my hands, because that leaves more space between where I bought Tesla and our stop loss area. So the first thing, it could drop, we could gap down in Tesla, or the second thing is it could open flat. The third thing that could happen is that we get a big gap up in Tesla. If we get a big gap up in Tesla, that's where I have to be disciplined, sit on my hands, and stay out of the trade, because I'm late to the party. So I would not take that trade. The Holy Grail amazing setup would be a big gap down to the 764 level and use that area as our stop loss, but I don't see that happening. Our best chance is to buy Tesla low, then use this low here for our stop loss. And if it never touches our stop loss, then we get big gains. So that's what I'm looking at tomorrow. Thanks again for listening. Make sure you like, subscribe, and leave your comments down below. Thank you so much for listening. Have a great night. Bye.